don't care, I know. Ventura Highway in the
Good morning, good morning. It is 6:32. Damn it. Thought I'd get here on time at 6:30. Again, there's so much going on each morning. It is April 27th. My name is Scott Redler. I'm the Chief Strategic Officer at TVLive.com. Here's a disclosure. Get to take a look at the chart of the spies as we get going here, as I say hello to some of my dogs around the world. This is what is the 6:30 Club every day, where we get ready for the day. I go over about 40 charts. I put together an actionable plan in my head. If this, then that. If that, then this. I look at what's driving the tape, which earnings, what needs to hold, if this gets above that, if this gets below that, etc., etc. I try and simplify it so everybody can kind of follow along, where we can make some cash flow, how we stay out of trouble, and just continue to work on our process and get a routine that we like so we can do it every day. So this way, you could get through the weeks and the months and hopefully enjoy them, right? That's what we're here to do. We're here to enjoy ourselves, enjoy our families, our friends, and each season. It is spring, and there are some good cherry blossoms out there. Either which way, what's up? YouTube. Am I on YouTube? I had my tech guy yesterday trying to figure out whether or not we could stream this to YouTube as well as Twitter. I don't know if I'm on Instagram. What do you want to put in? Do you want to put AAL puts? All right, what up, Palm Beach? What up, Belmore? It's working? Okay. That's good to see. Who else we got here? I'm in my little collared shirt today. I'm going in the city around 11:30. Going to meet somebody face to face. I've spoke to a lot on Twitter. You remember Jake from TrendSpider? Done a few webinars with him. I like his charting, and he happens to be in town for the CMT this week. So we're going to go to Harry's for a steak sandwich and an IPA around 12 o'clock. So if you're in the city and you want to come say hi, we'll be at Harry's around 1:15. Anyway, let's see what we're doing here. At this point, we've had some earnings this week. We've had some decent movement. A lot of these names have triggered above levels that we've went over. And then since earnings, there's been different types of strategies to make cash flow. Every name has been a little bit different, which we'll get into. If you recall early this week, the range was broken in the SPYs. We broke 410 in the Qs. They broke 314, and now, we're doing a little back testing. You look here at the SPYs. We had an inside wedge, right? This was your inside wedge. We broke below 410. I believe that was what? This was Tuesday, Wednesday. Today's Thursday. After holding a little bit, and then yesterday they played with the range a little bit. We were gapped up on Microsoft. Google was neither here or there. And then, broke below 406. Remember that early morning? Then we came back above it, retested the 21-day, and then came back below it. So lots of round trips. The people that are making the most money right now are playing the ranges. They have expectations down. They're not looking to buy strength for a higher high, and they're being very selective when they press shorts. And the ones that have been taking trades by like 950, all of a sudden, boom. There's been some of those setups that have worked very fast. And then if you go for additional setups, it's been a little tricky and you can get chopped up. So anyway, that's a chart of the SPYs. And now if you look here, kind of cute. We closed on the lows of the day, and now the SPYs I think are up $2 up, at 406.67. So if you look at 406.67, where is that? That is below 407.83. So anybody looking to fade this move, because we're heading for a recession, and yields, the TLT is a little bit up, and you're looking at some underneath the surface AD lines. Well, you could short verse 407.83. It's hard to buy anything that's up. It's hard to buy anything that's down. So it's hard to buy anything. I feel Google is under promising. Will deliver while Microsoft and other AI names are overhyping. Listen, Burger Financial, I hear you. Listen, I was in a Google call spread yesterday. I made pretty good money because they brought Google red. Then all of a sudden, Google went green and had a push. We played Google up to like 106-ish and made decent money. But if you went back to it, you know what? It was annoying. And actually, if you think about it, if you traded Google yesterday, I traded Google yesterday, midday, the SPYs made another push, and it couldn't get away from 105. So midday around 11 o'clock on my Google showing relative weakness. Just be careful there. And then boom, market came in, Google went back to 103 and change, and just a lethargic mess, but we'll get to that. So here's a SPY's 406.67, right below this little moving average. We'll see what happens here. Does strength get rejected again? I would not be buying the up open. Anyway, you look at the Qs, is very similar. The Qs have been a little bit better. I'll get to Amazon for you in a second. The Qs right now are at 314.26. Also below where it got rejected yesterday. The Qs, if you look here, there's still some talk about this, cup and handle pattern, but to me, it looks like it's starting to roll over, and you have to be careful. And yeah, if somebody's like, Red Dog, are you concerned that there's 8 stocks that have made the S&P and the Qs look very good while the advanced decline line deteriorates, while every other name is 60 to 70 to 80% off all-time highs? I'm like, yeah, that kind of sucks. If you've had 30 positions on the last 3 years and didn't use your sell rules when they broke moving averages and you just held them, and now they've turned into, cement fixtures in your portfolio, a good trade turned into a bad trade that turned into a long-term investment that kind of, whatever, that sucks. Yeah, it is the market that we're in. For traders, I'm like, just don't trade them unless you see a really strong day one on big volume, and then you get follow through where the next day it opens down a little bit, goes right to green, becomes special. Hey, then it turns on the radar. But otherwise, you got to stick with what's working as a trader. As an investor, it's a whole different story. I'm not going to get into that. But anyway, here are the Qs. 314.97. This upper range broke also. It's now below the moving averages. For the entire month of March into April, we were above the moving averages when we took out this downtrend line. So this is something different, and we'll see what happens here. Do we get rejected into this area again, or do they squeeze a little bit? Even those squeezes where they push through, then all of a sudden shorts get squeezed, sellers sell into them, and then we come back in, and then it changes again. So it doesn't really mean much. I told you guys to watch JP Morgan the last 2 days, and look at that. You had an upper flag, and then it broke right there. That was your way out. That told you, hey, pressure. JP Morgan, that was supposed to be getting all the flows and the deposits and the this and that had a big move after numbers. That's it. Broke the 8th-day. No longer bull flag potential to go, which I thought was ridiculous anyway. It broke. On top of, FRC, which we also discussed how there was no real rally here. The stock was $140, then it was $120, and look at that. Listen, guys, as traders, you could try a few things and get a few paper cuts. It could wear down you mentally, and that happens. It's our job to stay mentally strong. That's why you have a strong routine in the process. That's why I'm up every day at 4:30. That's why I'm in the sauna every day, sweating it out, thinking about my week, thinking about my day, thinking about my positions, thinking if this, then that. Then I go in my ice barrel and I still think about it. And I do that every day to rewash the day and get myself ready for the next day, because sometimes things are monotonous. This isn't a get rich quick job. It's a day in, day out, put it together, let it add up and get paid. But anyway, look at this friggin' craziness. Boom. There's a lot of devastation there. And there was not really much of a rally here. And how cute is this? Everyone thought the coast is clear when WAL came out and had a big gap up above this bear flag. And then, a lot of people got caught with, trying to be extra cute with FRC. This is why I say never buy stock ahead of an earnings call. I don't care. Listen, if you're an investor for 4, 5, 6, 7, 8 years, and that still kind of sucks when that happens. But anyway, and you don't get paid for a living, that's fine. But if you get paid for a living, you do not buy stock into earnings or short stock into earnings. You buy options. Risk is premium paid. Never sell naked premium either. I know a lot of people that were selling like, oh, I'm gonna sell the puts at $18, at $17 and collect. Okay, you just blew up your month and your quarter. Anyway, lots of crazy devastation. So if you find yourself getting a little chopped up, just don't let it turn into breaking the rules and trying to throw a Hail Mary. Some people are like, Red Dog, you're throwing a Hail Mary. You're in a lot of snap calls, for numbers today. I'm like, I'm in a lot of snap calls. My risk is premium paid. That's because Snap has, it's been down here for almost a year and a half or more, okay, going sideways. You have every kid in America on it, and maybe they don't miss for the 6th time in a row, but that's just a play. It's not a great play, but risk is premium paid. But I'm saying, what? I'm giving it a little shot here. Was it $70 in 2021? You're talking about a $10.20 stock. Maybe, they beat. But again, risk is premium paid. I'm not buying 40,000 shares of Snap. That could be $5 tomorrow. Yeah, buying $10,000 worth of calls that might be, 40 or 50 or not. Anyway, let's move on. That's just earnings play. People are like, why are you in Snap options? Anyway, that's that. So let's go to some of the earnings that have happened. And what do you do now? Listen, Microsoft. Microsoft, we talked about, can it get above and stay above 292 and 294? Okay, because that was your momentum level. And it did. Didn't give you much of a trade. You had to take it through after hours. But now what do you know? 292, 73, 299. So what I call this is just another strategy post earnings. There are two ways to do it. You could try and be long versus 292.73, meaning if it holds this earnings gap, usually you can go sideways and trade in the direction of that earnings gap, okay, to the upside. And you can see the room here on the weekly chart if that's the case. Nice candle here. If it holds above this, hey, maybe there's room to 326. But if the market's going to be that bad, it can't do it by itself. If the market's going to be that bad, what clue could you get? It breaks into this gap and fills it, and there's no more power. What's Microsoft doing right now? Microsoft's probably up, with the futures. Let's see what Microsoft. It's not even up. Wow. Okay. Microsoft is actually flattish. I would have assumed it would have been up a little bit. Hold on, but it's not. It's 295. So that's within this candle. Sometimes it takes 2, 3, 4, 5 days to digest. Sometimes it goes thereafter. But that's how you would approach it, and that's how you look for clues. If Microsoft trades into this gap and it was one of the stronger reports, then the market's that weak. If it holds here, goes sideways, maybe it goes higher, but that's that, okay? You look at other post-earnings plays. Tesla's been a short. Yeah, they gave you a little trade the following day or whatever, but all in all, if you look at Tesla here, Tesla gave you two pivots. First one was right here, 160.56. Okay, had an inside day, and then it broke a little bit below. Yesterday, it broke below and hit 153.15. This is your post-earnings gap that it never filled, so that means it could trade in the direction of that. And now it's going into the prior quarter. Remember, this was a good one. You gapped up, went up, and this was when there was momentum. Now it seems like it's to the downside, so I'm just saying, be careful with Tesla. Let's see, what's Tesla doing today? Anybody want to tell me before I look? Any smart guys out there? Where is Tesla? Tesla is... I would assume probably up like $1.20. Tesla is up 94 cents, a whole lot of nothing. Is what it is. Google, no power. Google for some reason they just don't like. Okay, decelerating earnings, but again, stocks done absolutely nothing. They don't like the CEO either. That's from what I hear. They have a big buyback, so you know what? If it doesn't get a little bit better the next day or two, it's going to go from the B list to the D list. I have an A, B, C, and D list, and about 45 go-to names. As names act better, they go to the top of the A list. They become better setups. They get more real estate in front of me when I'm trading. As they trade poorly and as they get lethargic and as they don't pay me anymore, they move down the list because they need to rebuild, and either they come back up at some point or they're done. Lots of times stocks just are done. Not saying Google's going to be done, but I'm just saying that that's how you have to, do your real estate. So Tesla right now is at 154.69. It's in no man's land. Netflix also, blah. It had a gap down, gave you a nice trade the day after to fill the gap, then it pushed a little bit, and now it's looking more like like a bear flag. So not a lot of fun here. Nvidia and Meta. Okay, let's go to Meta. So Meta, I told you guys, 222 is that major pivot. That's the spot that it's got to get above and stay above if you're trading it after hours. And that happened. It went fast. I was doing my recap, and all of a sudden it came out, and boom. I did not play an option play. I figured, hey, from 88 to 222, I don't want to pay the premiums and, just throw out 5, 6, 7 grand to make 20. I'd rather trade it after. But anyway, Meta right now, Meta's going to be similar to, what's it called? In Amazon. Can it hold the majority of the move? It's a 233. So if you traded it after hours through 222, which was the high of the past few months, you made good money. If you didn't trade it after hours, now what you have to do is you got to give it 5, 15, 30 minutes to settle out, to give you a low to trade against or a high to short against, if that's what you're going to do. Some guys like, hey, Red Dog, you said maybe on the weekly chart this thing can go to 235, and that's right here, and we're at 232. So how much room do you have to major resistance? Yeah, you have $3. Is it worth it? Sometimes lately these days I'd say, hey, is this even worth it? So anyway, hard to chase this, but if you're going to short it, let it put a high in, come off that high and short versus that 5-minute high. If you want to buy it, okay, let it come in and find like a 15-30 minute low, look for a divergence and buy it versus that, or wait for today's candle to form, and then you have better parameters to define your risk if you actively trade it. But all in all, you look at the weekly chart. Weekly charts tell you a lot more than daily charts sometimes. This is when, as a macro investor, if you use charts and my moving averages rules, this is when you could have got out of the way at the 8-day, or here when it broke all the moving averages and then it was reborn. You didn't have to catch this low here. It was right here, right around 124. Okay, now you're at 232. Okay, so you could have made $100 if you timed this using the moving averages. If you didn't, you're still, I don't know, you're still a big percentage off the highs here. But anyway, it's the market we live in, pricing and time. Nvidia is interesting. Nvidia is a chosen one. You have a nice little bull flag. Let's go to the daily chart. It's been a little choppier lately, right? You've had this 281 area. This is kind of when it got reborn again and became a go-to type of stock. And yesterday was a little choppy. If you want to take a closer look here, I guess you could raise this up. What was yesterday's high in Nvidia? 273. So this is now resistance. Every time it looks like it's about to break down, it gaps up. That's a little tricky. So let's go. You don't need this here right now. So this is micro support right here. What's that? So you have a doji here and you have a gap up. I bet. What's it up today? 4 or 5? Let's see. Nvidia is up 373. So Nvidia right now is at 273. So it's right here. So can Nvidia get above and stay above 273? That'll give you some clues to the day. If it does, there's nothing to 281. Okay, if it gets above and doesn't hold it and goes to, like, some people are like, I'm going to short it because there's no names that are holding up really that well, then goes to 274, doesn't hold 273, you're short against 274 and maybe it comes in. I'm wondering if we can catch Mara. I don't know. Yesterday was my two easiest trades was yesterday, Mara and BITO. You know why? Because they gave you a signal to buy on Tuesday. They gapped up nicely on Wednesday. Sold 75% of it pre-market. Then I sold the rest during the day, and I didn't go back to it. Then all of a sudden, at the end of the day, crypto comes in. Both of them come in, and I'm like, you know what? It's a day-and-a-half trade. Sometimes the day-and-a-half trades are the best ones. Okay, sometimes you try and massage it and go with it, and then all of a sudden, the trade gets a little noisier and it's hard. Looked to me like Bitcoin kind of rallied back up a little bit. So let's see. Take a quick look at Bitcoin. Let's see where that is, which has been a great trade this year. A lot of people made a lot of money in Bitcoin this year. It's been acting much better overall, just giving you some tradable moves. So Bitcoin is, where's my Bitcoin? There it is. Look how loose and wide that was yesterday. And then back up. So I didn't do it. I would not buy strength in Bitcoin. I mean, or Mara or any of those things. So here was your 50-day that held. This is where it first ignited for the year. This is when I played it pretty heavily and made good money in my Coinbase Pro account. Then right around here is where I played it. I played BITO and Mara in my equities account. And then we bought it yesterday. And now, I don't know. I would not be chasing the strength in that. If you bought the dip yesterday because you sold it into the strength, great. Congratulations. What are other people talking about this morning? I don't know. Boeing. Loose and wide in this range is kind of a pain in the ass. SPR didn't really do much either. XLE was, I did snap already. I'm not focusing on that more. XLE broke through into this gap. I've been trying to play Chevron, and Chevron has been not good, but anyway, we'll see what happens today. XLE, high, lower high, filled the gap, so there's no more buy pressure here. It's just a choppy mess. Went over JP Morgan. Apple's interesting. Apple, there's a lot baked into this Apple. Baked apples. I said I'm funny. Anyway, look at this macro area. It's a big macro area. This stock is not 80 to 90% off the highs like a lot of those high growth names. This stock is not 50% off the highs like in Amazon, or 40% or so off the highs like a Google or Meta. This stock is literally, a stone throw away. So this report's going to have to be pretty damn special, not this week, next week, for it to continue. So we'll see. If Microsoft all of a sudden rolls over, doesn't hold the earnings gap and continues lower, if Meta gets sold into this strength, okay, those are the two really good reports, and then you have the ones that were like lethargic, whether it was a Tesla that's headed down or Netflix. What is Apple going to need for it to, really have some traction here? If you're an investor in Apple, do not, stray, especially if you have 2, 5, 10 years. But if you're, an active trader, you got to be a little careful here, considering that the spies and the Qs are getting a little tested. We broke that upper range, and things aren't reacting so fantastic to numbers, and then it's going to all be about the Fed and disinflation and the recession, all that kind of stuff. So either which way, here's your macro chart of Apple, which looks pretty good. One of Chase's biggest positions. But if you look here, look where, look, this is right, there's a void here, which would be nice, but this has come a long way. So this is priced for perfection. It's going to need a good solid report to continue. It's not like Amazon. Look at Amazon. Amazon's still in the gutter. You have Amazon after the close today. Look where it is. You're talking about 107 from 187. Okay, so this has been battered and bruised. So here's 120. There's a chance. There's a chance that if this isn't better, if this is decent, maybe you could see 120. So if someone asked me what would I do if I was doing a call spread on Amazon, you can go right here. If I was doing a call spread, I would say you could do like you could do like a 110 by 115. Okay, you're probably risking $1.50 to make 3.5. Okay, and Amazon, kind of like a Google, the expectations aren't high, but the business isn't doing great. Okay, so the ones that had expectations high, like a Microsoft and a Meta, they delivered. The ones that you thought, hey, maybe they could surprise, like a Google, didn't do much. And I would put Amazon in that same camp as, even like a Netflix and a Tesla. Everyone's like, what do you think, Red Dog? I'm like, why would they be so good? Netflix has got competition up to yin yang. There's no more COVID. People are out everywhere. And the comps are hard. I'm like, as far as Tesla, the deliveries were weaker. They've lowered prices 4 times. The margins are getting pressured. Everyone's doing EVs. Musk is a little bit out there with his Twitter and his Starship and this and that. So with Amazon, cloud slowing a little bit. Listen, the Azure numbers give it a little bit more inclination that it might be better. But then again, if Amazon's good and Amazon gaps up, you better sell it like hell, because Jeff and McKenzie have 20% of the float and they're sellers into any type of strength. So the dynamics here in Amazon are just tricky. It's a tricky market, guys. It's a tricky, choppy market. Take your trades, keep your sanity, and just make sure if you're netting money, keep netting it. Don't chase. Have your levels. Again, one more time. Spies. This is your resistance area. It'd be very hard for this to get back above 410, let alone 407.83. If the Qs were to, take this area back and pop back into this range, I guess, to give it some I don't know, a little bit of sigh of relief that maybe these things could repair, and this was just an overthrow trap. But I think that's going to be hard to happen. Google Cloud was excellent. AWS could also be strong. It could be. Listen, I'm not saying don't do it, guys. Just make sure you're not just buying 10,000 shares of Amazon to save you a month in your quarter. If you're going to buy Amazon for earnings, okay, have a call spread. The 109s by 114s or the 110s by 114s, you're risking probably $1.50 to make 35, 3.5. So if you do 20 contracts, do it that way. Or if you do 100 contracts, at least you know what you're defining. If you want to do a lotto spread, you think it's going to be nuts, then you know what? Buy the 115s and sell the 120s. You're probably risking not even $1 to make 4. That's 4 times just to get to here. So figure out what you want to risk and how you want to risk it, and then also trade it after hours. And that's it. Wow, it's 6:56. I'm a little late already. It is Thursday. Cheers to everyone for tuning in. I appreciate you. I don't know if I went to YouTube. I don't know if I went to Instagram, but for my friends on Twitter, love to see you guys here, and I appreciate you. Have a good day, guys.